you sort of stop acquiring deals and you look at your existing portfolio, there's a lot of money on the table. A lot of times people are moving so fast, they're not optimizing what they have. Like Mitch and I are like looking, obviously we go through our P&Ls, we're looking at ways to cut expenses, past utilities. We're expanding an RV park of ours because we had just this 10 area that was just sitting there dead. So we're putting 15 more pads in. Like all of that is way better use of our time than closing the next deal right now.
That's also my focus right now. I mean, I think there are periods of time of growth, and there's times that I'm closing multiple deals at a time. But I also am careful not to be just a deal junkie. Like, not just. I think the active need to close a deal just to close a deal or do another deal becomes almost an addiction. And I know I've gone through periods of time where it's like, man, I haven't done a deal for a long time. I need to do a deal. I need to do a deal. And the truth is, optimizing my current portfolio. Like, I've built up a large enough portfolio where there's things I can do with inside my portfolio that are actually a better use of my time, energy, money. And it's not always about putting just the next deal together. I've watched people buy bad deals because they're so focused on I need to buy another deal. I need to get X amount of unit counts, or they set these goals that don't actually align with what they want. I'm going to close 100 deals or 100 units by the end of the year. And it's like, well, what if it's 100 non-cash flowing units? What if it's 100 units that take a shit ton of money out of your pocket, which is not why you got into real estate in the first place, right? So it's like aligning what you actually want with the deals that you're taking down, because it's easy to take down a deal that doesn't align with what you want, but that's the fuck's the point of that?
Sometimes you can look at your existing real estate and you can say, oh, I've got an RV park that crushes it. We've got a ton of demand for it. And it's a tent area that generates no revenue. You might get a few tent reservations here and there. We can fit 15, it's a 35 pad RV park, then there's 2 apartments. We can fit an extra 15 smaller pads that are for smaller motorhomes, like Sprinter vans, et cetera, which are really popular in this area. We're in Hood River, which is a big outdoor mecca destination area. And I think, the budget was to expand those 15 pads like $100K or something. It's gravel, packed.
It's like
gravel,
1 to 150. It's not insane.
Yeah. And we ran some quick numbers where you even if you're 50% occupied on a 365-day calendar year at reduced rates, because we're not doing a full, depends, but it looks like we're doing more electricity, water, no sewer hookups. So at a reduced rate at 50% occupancy, you apply an appropriate expense ratio. I think we're adding, it's definitely a 7-figure add in value and substantial cash flow to the property, right? You can run the numbers, Mitch. But yeah, there's 100K or 150K to get a $1 million lift on value. I'll do that all day long.
Well, that's what I'm saying. And there's a lot of when you look at the numbers, there's all kinds of returns you can achieve. So for example, let's just say on that, it's a 7 or 8x return on your money, which is real, right? To go out and look out in the world and try to find where you can make a 7 or 8x return, it's possible, but not super easy. And why would you be focused all of your time there when you have this thing that you need to optimize that's right in front of you? And we see the same return when you're talking about submetering, for example. You go spend $30,000 on submetering, but you save $2,000-$3,000 per month. When you apply an NOI to that, it could be $300,000-$400,000 savings. Not savings, but appreciation. Meaning literally you're I invested $30,000, but I made $300,000. It's like a 10x return. And I'm just kind of, these are estimate numbers, but the point is looking inside your portfolio is so important. Not to mention you're bulletproofing yourself for all environments, for hard economic times. You're bulletproofing yourself for times when interest rates go up and you have to refinance at a larger, higher interest rate. I think it's your responsibility as an operator. And Travis and I, we talk about in our business, there's these purposeful plateaus. So we'll scale, we'll go buy a couple properties, we'll go, grab, 150 units, for example, is the last purchase we made. But then we kind of plateau and we go, okay, let's make sure we're really optimizing what we have, taking care of what we have. Not to mention we have investors, so we have a fiduciary responsibility for that, obviously. But whether you have investors or not, optimizing your current portfolio, looking at analyzing the P&Ls like it's a new deal every month or every couple months. Hey, how would I come in and change this thing? And then, we're doing that I mean, sometimes weekly on our properties, and then talking to our team, hey, we need to make this change, because I think it's an ongoing thing. It's not, you don't set and forget it.
If you like what you're hearing so far and you are not making at least $120,000 a year with cash flow real estate or have millions of dollars in equity, come check out our 0 to 100 elite community. The link is below. Check it out. I think there's a lot of different things you can do to optimize once you've built up a substantial portfolio. I mean, just hearing you guys speak, I'm reflecting, and that's really what my focus is right now. This last year or so is how do I optimize what I have? I definitely lean way more towards like ready, fire, aim, or jump out of the plane and build my parachute on the way down, and that has served me really well. I've bought a ton of real estate over the last 20 years. And yes, I'm buying on fundamentals. I'm not just blindly, buying real estate. There's work and time and energy and effort that goes into how I structure those deals. But a lot of times I'm like, you know what? I own this real estate and I'll figure out how to optimize later. And I've done that and it has served me well for a lot of years. But now, like, I think about like what you said, Mitch, about bulletproofing my portfolio. And there's a lot of things that I'm doing with inside my portfolio that I've just put off. Like, I have this mobile home park and there's a 1 acre lot that came with it. And I knew the lot next to that sold for like $225. So I think my lot's worth like $250,000. Like, it sat there vacant for years because I don't need it. It wasn't, the mobile home park wasn't reliant on the value. It was basically a free lot to me, but it's worth, $250,000. That's a small thing of like brain effort of like, why have I not listed that lot? Why am I not trying to rent out that lot for, maximum revenue and increase my cash flow? Like, why am I just sitting there? I have some park owned homes in some of my mobile home parks that have sat vacant. I'm like, why am I not just giving these away and allowing someone to come in, rehab these, pay space rent, and maybe sell them for a profit, but then I get a tenant. I have refinances I'm working on, right? It's like, it's optimizing. Like, right now, the best use of my time and energy is not putting necessarily the next deal together, but how to optimize what I have, whether it's a refinance, selling some of the smaller properties, refinancing. I think I already said that. Selling off that lot. Like, it's just all these little things that I've put off because the focus for a lot of years have been buy the next deal, buy the next deal, buy the next deal. And that has served me well. But now it's time to really optimize and make sure that my portfolio is bulletproof and is actually aligned long term to set me up for even more success.
Well, but I also think it's amazing as a real estate investor with a portfolio, and our our portfolio is growing. It's growing slowly, methodically, but like, I can wake up every day and be like, okay, there's always opportunity. Whether or not I'm taking down a new deal or not, there's opportunity inside of our own portfolio. And that's pretty awesome. Because Travis and I do it all the time. We go through and we're like, dude, if we did this and this and this, we're going to add this much value without buying anything new, just optimizing. And I think if there's not a lot of social media push for this, or like, it's not popularized to be like, hey, slow down, don't buy a deal, optimize what you have. Like, it's not popular, it's not sexy, and it's not that fun. But like, it's not only for returns, but also for longevity of your portfolio and of you as an investor. Is like, optimizing gives you a return, but also protects you. And like, we know in real estate, we can't predict when the cycles are, but like, by nature of this business, we go through big cycles. And we've seen big cycles just in the past, couple years as interest rates and inflation adjusts and macroeconomic things affect us. Like, I tend to believe that the investors that can be in this game long term and hold a lot of real estate will win in a big way. But you got to make sure you're in the game for a long time. You can't get stomped out when things get hard.
Yeah. And I think that a lot of people, and I know we've fallen guilty of this, where you kind of just roll and you don't actually sit down every month and really dial into your P&L and really understand. Because there's a few things that allows you to do. Number one, just like we're talking about, you can spot threats and opportunities, right? You could say, we've got expenses that are running hot here. I can modify that. Maybe I do a rent survey, find out where my rents are to market. Maybe I'm looking at excess CapEx, whatever the case is, finding a leak in a pool because your water bill doubled or something like that. But also it allows you, I think something else, and we need, I think we need to do a better job of this, is always go back to that original underwriting that you did and always benchmark against that, because that gives you lessons. Like, oh, I was too rosy on my cap rates. I was too rosy on my expense ratios. Oh, I forgot to, increase my property taxes, in the future so it just makes you a better underwriter of deals, but it also allows you to optimize your portfolio and identify threats and opportunities. So I think that's where people get hung up is they operate in their business, especially if you're running applications, fixing toilets. Even if you're a small real estate investor, and you just have a few units, get in the habit of sort of getting out of that and like we say, be an investor, which is be an asset manager, managing your assets, understanding the financials, and that's going to allow you to be a better investor.